Good morning, everybody. It's the 20th of April. We're Signal Centre Talking Bull. I'm Joe, joined by Steve. Good morning, Steve.
Good morning, Joe.
How you doing?
How are you? Yeah, not bad, thanks.
Good. Okay, back in the studio today after a day in London, which was nice. But yeah, let's crack on, shall we? Let's get into the latest headlines, and then we can get stuck into some charts. As always, for those of you watching, if you would like an opinion on a certain market, anything you're trading at the minute, anything you've got a problem position with, or want a second opinion on, please feel free to post them up, and we will do our best to cover as many markets as we possibly can. But let's get to the headlines first of all, and let's bring those up on the screen. So, US prices, price pressures, little change. The Fed's Beige Book reported that overall economic activity was little changed in recent weeks. Overall price levels continued to rise moderately, but selling price pressures had eased in manufacturing and services, and overall inflation pressures appeared to have eased slightly. One of the Fed members, the New York President Williams, stated that US inflation is too high and that the Fed will act to lower price pressures. He added that inflation is moderating, but demand is still outstripping supply. He added that it will take some time to gauge the impact of tighter banking conditions. There was no pushback against very strong market expectations that rates would be increased at the May policy meeting. We've also seen expectations rise in the UK. The Bank of England suggesting that higher than expected readings for core and headline inflation triggered a fresh increase in interest rate expectations. The chances of a rate hike to 4.5% at the May meeting are now seen as close to 100% probability, while markets also now expect that rates will peak at 5%. The Eurozone current account surplus was noted yesterday. That widened to 24.3 billion euros for February from 17.3 billion in the previous month, and well above the expectations of 6.7 billion. Although there was a substantial deficit in the second half of 2022, the Eurozone recorded a 12-month surplus of 114 billion and equivalent to 0.9% of GDP. In terms of what's happening with the markets, we continue to see narrow ranges prevailing. Overall, markets were again held in tight ranges on Wednesday with a lack of major developments, and Wall Street was broadly unchanged for a second day running. The dollar did drift lower in early Europe, the European session on Thursday. We've got PMI data due out tomorrow. That's kind of now the main focus for the rest of the week. The latest business confidence data will be released on Friday with data from the Eurozone, US and UK. The latest data on growth, inflation pressures and relative outlook between the countries will be a key element in the data. All manufacturing releases are expected to remain in contraction territory, so below 50. So that's it for the headlines. Steve, let's take a look at some charts. Do you want to kick us off with a look at cryptocurrencies?
Yeah, sure. Let me just bring up my screen. Screen. Also, was there Tesla's results out yesterday, Joe?
Tesla's results were out yesterday, yes.
They weren't good, were they?
No, I mean, we can touch on that as well if you want. Do you want to bring the chart up there?
Yeah, sure. I was just having a quick look at it. Let me. That's after hours, isn't it?
Yeah. So there's some of the pricing providers will provide it. So if you look at some of them, maybe the CFD provider prices, they will give you. So click on stocks. Might narrow it down a bit, or maybe it didn't. Scroll down. No, keep going. Oh, maybe they haven't got the CFD prices for it.
Maybe not, but yeah, it's. I saw it was not great, so we'll have I'll have a look for that when you go through the FX or something.
Yeah, stocks. They're heading back to March lows according to what
yeah,
I've seen commentary and some of the overnight charts.
Yeah, cool. Okay. Well, let's take a look at cryptocurrencies first, and Bitcoin, the big boy, had a really big bad day yesterday. We're still in this this pink area that we got at the top of the chart. If I sort of squeeze the chart out, you'll see why. This is a level of interest, a level of support, and also a level of resistance now. And its market seems to have moved up, got up to 31,000, and has rejected that area and moved back down. A bearish outside candle yesterday on the daily chart, so that's pretty negative, and we're sort of like slipping back. Although it won't be just, it doesn't feel like it's just going to be a quick slide, because we have got this work that the market has done around price over the last, well, since March to April, so like that whole month we sort of like went sideways, banging against the top of this resistance or the bottom of this resistance area until eventually breaking through. But we have broken it back down. We haven't managed to continue higher. We have got an overall or an overriding formation. It's like an inverse head and shoulders formation, which I can show you on the weekly chart. So this is one to really be considering over the next few weeks. Inverse head and shoulders formation, the neckline 25,400 on with quite a clean one as well. So that was the week of August 15th, week of February 13th this year, and we've broken up above that. And a lot of the times what happens in these types of formations, inverse or normal straightforward head and shoulders formations at the top of the market, price action will break through, come back, retest, and then kick on. Measured move for the overall move was 35,000 to the upside. So, but we've failed at the moment and are giving up yet last week's gains, which we saw. So last week's low would be the first line of support, 28,184. Once we break back down below that 29,000 level. So watch out for that. Definitely a lot of interest on cryptocurrencies, as we know. Let's jump back down to the daily chart and see what happened to Ethereum yesterday. Ethereum has given up those gains. It was sitting nicely above the support at 2032, which was a previous swing high all the way back in August last year, and it catapulted through, absolutely dropped like a falling knife. So it's one of the worst days you can see, probably and since going all the way back to November last year. It's given up quite a huge percentage of the gains that it's built up over the last couple of weeks or so. So back down to around support level 1945, next support 1844, and 1730 is the main pivotal level that we've watched on Ethereum for the last year or so. XRP also given up those gains. The resistance that we had before at 56, we broke through that. That was the 29th of March, got up to 58, and since then we've posted a lower high. That was it coming in around about 54.60, which was also a swing high previously. Acted as great resistance, and the bearish outside candle from yesterday has put the market on the back foot. We breached the 48.24 support, which was posted from the 3rd of April low, and reacted higher from there. Slightly positive on the day, but it feels like there's a lot of pressure on the cryptocurrencies at the moment, and we could see further downside. Looking at commodities now, and gold continues to bat around, and there was quite an interesting reversal in the fortunes of gold yesterday, and we saw price action. We was in this triangle formation, quite a symmetrical triangle, where when price action broke up through the top of the triangle on the 4th of April, we came back and retested that downward trending resistance. So it's a reverse trend line, and price action reacted positively from there, made a new high around 2050, and then we had the bearish outside day last Friday, and pressure's been on, and yesterday we actually hit that reverse trend line once more, and that was a pretty decent reaction from there, quite a positive reaction overall, because we've it was probably the midpoint of this symmetrical triangle as well, so there was support as well from this previous swing high resistance, and yeah, prices have moved. What am I looking at there? 1960, and prices have moved higher from there. So we got down to 1969 yesterday before reacting higher, and trading around the 2000 level. So really should look at the short-term charts to see if we've managed to get back above the cloud. Not quite. 4-hour chart still below it, but a nice morning doji star formation. Morning bullish hammer formation rather. And on just quite interested, what's this orange line? What have I done here? Didn't like that. And on the hourly chart, we are pushing or trying desperately to push through this cloud as well. So from a risk reward perspective, it's not a bad area to fade, but if you hang around for a few hours, you'll get a little bit more either confirmation of that, or you get the break through the cloud and through that 2000 psychological level. Still feels like we have a little bit of work to do on the upside in gold. When we got so close to the all-time highs, it would be a real shame not to actually take them out. Looking at crude oil, that's on, since I sort of like posted my bearish trade idea on there, it's done nothing but go down. Well, it did stop me out first, obviously, but only just. Nevertheless, the 200-day moving average did a job on WTI crude oil. We're now breaking back below that gap that we had on the charts, and there could be quite a fast move here. Generally, when you do get gaps in charts, once they start to fill, they fill quite quickly, and you can see there's a nice $4 or $5 gap there. So we had continued negative price action yesterday after oil inventories as well, and now we're very much in the bear camp after breaking through that $79 level of support. That should act as resistance now. Brent crude oil, similar sort of price action. We broke through the support at 83.43, broke through it quite nicely, and we're already starting to fill that gap quite well. The premium, what we got as a premium on there, we've got about a $3.60 premium to WTI crude oil, so that's still quite narrow. Natural gas gave up a lot of the gains yesterday. We formed that double bottom. The measured move target for that double bottom was 259. We stalled at 250 yesterday and have reversed pretty sharply, off to a firmer start this morning. But that bearish outside candle from yesterday could prove significant in natural gas. A little bit of support coming in, so let's see if the bulls can battle back. Let's take a look at FX, and then maybe I'll go on a hunt for the Tesla.
Yeah, okay, mate, that sounds good to me. Let's get the FX charts up then. Let me just share my screen. And as usual, we'll start off with the dollar index. So we are seeing a bit of downside today. So we saw prices found support at this 182 level, posted a bullish outside candle last Friday. Prices pushed higher on the Monday, and for the rest of the week, up until now, prices have been pretty sideways, attempting on a couple of occasions to try and break out of this wedge pattern to the upside. We've got some short-term resistance now that has formed at 102.23. So that appears to be kind of the major level now that we need to overcome. If we can get above that, then we've got a pretty clean break from this wedge pattern, and we can start looking for higher prices in the short term. So obviously, if the dollar is going to start moving higher, that may suggest that we're going to see a bit of risk off price action around other assets, so particularly equity markets, maybe cryptocurrencies too. And given that we saw that reversal yesterday in Bitcoin, these things might be starting to line up a little bit. But we're certainly off of the worst levels of the session so far with the dollar index. Obviously, a long way to go. But as I said there, I reiterate, if we can break above 102.23 and close above that level on a daily basis, then for me, we have completed this ending wedge, potentially in the process of maybe a double bottom. Still got a long way to go before that is the case. That would need a breakout above that level there, which is at 105.88. But yeah, potential for some bottoming type price action here on the dollar index if we can break out of this wedge to the upside. Taking a look at some of the other majors, let's take a look at Euro US dollar. So we know that this has been trading within a bullish channel. Price action has been very constructive now for a decent period of time, going back to September. But we are stalling at these previous swing highs that we posted back in February. We made an attempt at trying to break through this level on Thursday last week. We then rejected it on Friday and followed through to the downside on Monday. But much like what we've seen with the dollar index, prices have been pretty sideways and choppy for the rest of this week. So potentially prices could pull back to the lower end of this channel. Obviously, if we break this channel, then that sets up a bit more of a bearish outlook for things. And again, potentially forming some sort of top here. In order to complete a double top, a lot more work's required. This would be the neckline, which is down at 105.31. But from a speculative point of view, given that we've seen this failure at resistance, if you wanted to place some speculative sells on Euro US dollar with stops above these recent highs, then that could pay off quite nicely for patient traders. Again, it is speculative because clearly the dominant trend in the short term has been bullish. Let's take a look at cable. Major resistance here at 124.30, and prices did break through that level quite convincingly on the 4th of April, but have yet to really follow through to the upside. So prices very choppy. We saw this reversal candle last Friday. We followed it up with further losses on Monday, and again prices attempting to recover slightly from the lows that we posted on Monday, but nothing really too exciting. So potentially we do have a double top forming here in the very short term. We can see we've got the two tops here, the top from the 4th of April and then from the 13th of April. And the neckline in this instance would be here at 123.44. So really tight range here. And really a break of this range is what is going to dictate the next move on this market. So if we can break to the upside, then we're targeting a move to this resistance level at 126.66. If we break down, then we have confirmed a short-term double top, and we can start looking for lower prices in the region of 121.64. So kind of in the middle of both of these at the minute. So if you're going to speculate one way or the other, obviously you just need to take a position and run with it. But really the breakouts are what you're looking for here to dictate the direction. But we do need to consider that the long-term bias at the moment still remains bullish, given that we've got a sequence here of higher highs and higher lows. Okay, let's take a look at dollar CAD. We can see here that this is trading in a big range. We highlighted this level earlier in the week that potentially may have provided some support. Prices did not quite get there. We got down to lows of 133.00 on Friday, so the big round number providing support there, and we've seen a decent bounce to the upside, and that is kind of in keeping with what we're seeing with the dollar index, in that that may be in the process of breaking out of that wedge. So if that is the case, then maybe that's as close to the bottom of the range that we're going to get, and we could see a move higher towards the upper end of the range. Also, what we can see here is that we do have a series of higher lows that are trying to form as well on the daily chart. Let's take a look at dollar Swiss. This has been pretty sick and pretty nasty. We saw a big breakdown through support at 90.84, and prices have continued to move to the downside. We can see how significant that support level was, and prices, while below that level, it does remain a case of looking to sell into strength. So dollar suffering against the Swiss franc for the time being. Dollar yen, we haven't seen much of interest in this of late. Prices pretty choppy and pretty range bound. We saw a big bearish channel. We saw a wedge formation. We saw a breakdown. We found support at 130.39. We've got resistance at 135.93. So we are doing a reasonable job of trying to approach that level. Be interesting to see if we get any reaction at that point. Let's just take a quick look at some of these commodity currencies. So Aussie versus the US dollar. We've got a band of support here between 65.20 to 65.47. That would be the area maybe consider looking at a buy. We've got resistance here at 67.93. Pretty choppy stuff at the minute. No real clear direction on that at the moment. I think it's a similar case with New Zealand dollar as well, although we could argue we've broken out of a wedge there and starting to decline to the downside, potentially having formed a double top. Okay, a couple of requests. I'm going to take a look at sterling New Zealand dollar first of all, as requested by Mark on TradingView. So the daily chart here, we can see price action's been fantastic for a decent period of time. So sterling has been pretty strong, New Zealand dollar not so strong. We can see the net effect of that is that this pair is moving to the upside with a nice bullish channel. So the next level to consider is this high that we posted back in October 2022. We can see there was a sharp move to the upside following the fallout of the disastrous UK budget. We're we've got up to that level there, and we are fast approaching that. And if we look at how that's lining up today, we kind of got the upper end of this channel and that swing high both kind of coming in at the same level, and just above that we've got a long-term 61.8% fib level going all the way back to these highs that we posted in March 2020 down to these lows that we posted in September 2022. So approaching some major levels of resistance. Has this still got some legs to continue moving to the upside? Quite possibly, but we do face some pretty stiff areas that we need to overcome if this rally is to continue in the short term. Looking at sterling yen, also requested by Mark, we know, and we've spoken about this, had a really nice breakout back in the end of March, taken out this downtrend resistance line, and since then it's been a pretty good story for sterling yen. Prices have continued to move higher. I've got some resistance here at 167.61. I always like these when you get these kind of breakdowns here, when you see big impulsive moves to the downside. I always like to use the candle previous, the low of the candle previous, as a level of resistance or support if we're looking at it on the reverse side. I often find that markets retest these levels and they can act quite nicely as support or resistance. And that appears to be the case so far today. Yesterday, we attempted to move through that 167.61 level, but stalled. We've had another go today and stalled as well, and posting a bit of red as it stands on the chart. So this has had a very nice move to the upside. In fact, it might be interesting to see, because of the velocity of the move higher, if we are oversold at all according to any of the standard kind of indicators that we would use. So this is the 14-period RSI. We can see that it just pretty much touched the 70 level, which would indicate overbought conditions in the short term. So maybe this is due a bit of a pullback in the short term. Of course, RSI is not a strategy to be used in isolation. Typically, I would use it to find divergences, which we don't have at the moment in the short term, but maybe running out of a bit of steam there on sterling yen. Over to you, Steve.
Oh, caught me on the hop there, Joe.
Sorry, mate.
That's all right. I just log it onto a thing, but I have got a. Let me just get rid of this. Here's a chart here. Can't really show it. It's not a TradingView chart. But that's where the price is at the moment. 169.57. And
an hourly.
Yeah, that's live price now.
Right.
So that's like $10 lower. So yeah, we're getting down towards that March swing low. So a little bit of a surprise to the downside after results came out after the market shut last night. So definitely an interesting one. And yeah, breaking through a little bit of support there. Let's take a quick look at indices.
Yes.
We saw a reversal yesterday on FTSE, and so yeah, well, most indices reversed yesterday, but FTSE a little bit of a hanging man type candle, bearish, engulfing at the top of the market, and it was quite due, as we said. We had about sort of like eight sort of like positive days and of price action, and now we've had that little bit of reversal, topped out around about the 79.20 area. And reversed lower and off to a negative start today. Similar sort of price action we saw in DAX or Germany 40, but it reversed its losses and closed unchanged. So a bit of a doji candle. So are we forming an evening doji star here? Potentially. We're off to a weaker start today. Already broken through some interesting support levels on the daily chart. And yeah, looking negative so far. US 30, we've seen doji indecision price action over the last 3 or 4 days, and we look like we're sort of like targeting that support area, 33,000, all the way down to 33,730 really. So see if we can get some follow through to the downside. 9-day moving average trading just below there now. Nasdaq also on the back foot this morning as we go in after that Tesla reading last night. That's pushing down towards that supportive area around about the 12,982, and S&P also pushing down. So yeah, we seem to be running out of steam after this pretty impulsive rally higher in all the indices. So yeah, looks like maybe a day of nursing or licking wounds. Let's dive into gun to head.
Yeah, let's do it. Okay, so Steve held the fort yesterday and picked a trade, but just a quick recap of what we do here. So we're both picking trade ideas. They're both going to be placed onto a live trading account. We are set up with a £2,000 account on Awanda. Both of the ideas that we come up with must have risk reward ratios better than 2 to 1, and of course must have stops and targets. We close these ideas at 9 p.m. Unless the trades hit stops or targets before that. And we both risk 1% of trading capital, so about 20 quid a trade being risked on these ideas. So yesterday, Steve, you posted a trade on dollar CAD, if I'm not mistaken.
Yeah, posted on dollar CAD. Really disappointed with this one.
We had, did we have some CAD data yesterday? Or was that the day before?
Well,
We had the interest
dollar
rate
just
decision.
dollar just like reacted higher, so across the board. So it just yeah, wasn't good. The one I'm really disappointed with is the flag, the WTI flag that I posted the day before. Only just
Oh,
stopped
that's
out on
a
that.
killer.
Yeah, because it was like 3R on side at one point during the day,
Oh,
and then
killer.
reversed all the way, took out the stop by like fractions,
Was that
and then sort
inventories?
of like this was inventories, but it was already down before the inventory figure came out, so maybe someone knew the inventory figure, who knows. But yeah, just it was like that bearish flag really looked like an opportunity, and it sort of started to go. It teased me, baby. So yeah, not happy with that one. Back to the drawing board, Joe.
Yeah. Okay. Have you got one ready for today?
No, I have not.
I've got to say, indices were looking quite tasty when you were
Yeah,
looking at those. Are they due a reversal, maybe?
yeah, I think they are. If it does feel like they are, I'm trying to get one that maybe marries up. So yeah, let's do that. Let's go. What's the 4-hour chart? I mean, there's still a bit of upside on there, but yeah, I've got
Oh, you bastard.
with
I was
us.
going to take that. Look
Oh,
at the
you?
weekly. Look at the weekly.
Yeah. Mm,
Look at that resistance from the left-hand side. Bang on it.
yeah. Yeah, nice area. You know what? I'll let you go. If you're set up
I'm not set
already,
up, but I mean,
so
I
you were
can
just
waffle
making
through
it
it.
up. Yeah.
No, I've got it on my screen now, ready to talk about. But
Go on then. You go. You go. Because I've
all
had
right,
a
so
all
Eurostox
right run.
50, we can see it's had a fantastic breakout from this wedge, and prices have obviously been, pretty strong in equities overall of late. But is this running out of a bit of steam? We've got these previous highs from back in November 2021 that we're now attempting to challenge. We've also got a high here from the 3rd of January 22, which appear to be stopping the market from moving higher. Obviously, we've had a fair amount of data out of late, all of which hasn't been particularly encouraging. Looking at the hourly chart, we can see here that according to the automated Elliott wave count, suggesting that we've just played out 5 waves higher on both the counts they've got here, and prices look to be in corrective mode. So we've taken out this level here, this low, with a very impulsive move lower over the last hour. So let's have a go at that, shall we? I'm going to sell it at current levels. My target is the 4333 level, which
Oh, like
means
it.
my risk reward isn't particularly good. I'm just about scratching the 2 to 1 on this. I mean, prior to while you were talking through indices, this was just below, above that that support line there, but now it's going some. Stop at 4403 if we can, Steve. I might need to just that slightly to get within that 2 to 1.
Well, no,
That's
but I
saying
mean,
4.38.
yeah, but this is like a different price, isn't it? Is this a
Ah,
different price, the Oanda chart?
you're
We're trading
50.
at
You're
43.90 at the moment. So I think if you if you want to put your stop above that sort of swing high, 44.13 your stop is at.
right. Okay, this gives me
But then
something
your
to work
target
with.
would be, where would your target be?
I'm going to go to the volume point of control there.
Are you looking at an Oanda chart now?
I am now, yeah. Yeah, so stop loss at 4412.
Yeah.
Tight. With a stop at 4347.
A target of
Target at
4347.
4347, sorry.
Yeah. I mean, you're on, Joe. So 2.25 to 1 that was.
Okay, that'll do.
That'll do, donkey. Right, I'm going to be a bit more brave and go for NASDAQ and just like knock this one out of the park.
Oh, there's a top pattern there, isn't there?
It looks like it, doesn't it? Toppy, hello. But we haven't quite hit that or taken out the neckline, so a little bit of risk there. But yeah, let's get this show on the road with come on, NASDAQ, come and have a go if you think you're hard enough. That sort of like approach, I think. So yeah, go for that. I'm not going to mess about too much. Risking 1%. My stop will be around about that level, 13,075, and I'll be targeting to move to 12,847. Does that look right? Yes, it's the units are sort of like we're only risking 1738 on this, but targeting a move downwards over a 2-to-1 risk reward, £37.65. We're looking to target if we get down there. So that's on. We're away. We're ready to rock and roll, Joe. Short of NASDAQ, short of Eurostox, indices. Look out. We're coming to get you.
Yes, indeed we are. Doubled up on the indices today. So let's see how they go. What is going to impact these trades today, data-wise? So we've got US jobless claims due out at 1:30 UK time. At the same time, we've got US Philly Fed survey. We've also got US existing home sales. That's out at 3 o'clock UK time. And then this evening, at 9:30 in the evening, what's he doing at work then? The Bank of England at 10 Rayo speech will be happening.
He
So
has a jolly up at Mansion House probably or something.
yeah, but how's he going to stay sober until 9:30
He won't be sober,
on a
mate.
Thursday in London? No chance.
Oh, how very dare you.
Okay, so that's that for today. Tomorrow we've got the PMIs. That's going to be the main event really this week, and then next week we can look forward to the US GDP number, the Q1 advanced reading. Obviously, earnings season is going to start kicking off now as well. With well, already we're in the process of that, but we're starting to get some of the bigger names reporting. Obviously, Tesla yesterday disappointing, so that could maybe set the tone for some of these bigger tech names. We've still got the likes of Meta, Amazon, and Apple still to report. So yeah, plenty to look forward to. Let's leave it there, Steve.
Yep, lovely.
Hopefully everybody enjoyed that, and we will see you again tomorrow.
Cheers all. Good luck.
Bye bye.